Today, guys, this might be a little bit redundant, right? Last week, just to recap, we went over the different platforms of how to search scenario questions, submit scenario questions, right? We use Rocket Connect if you need to get in depth with things. Obviously, there's AI, ChatGPT. UWM, has a very robust a breakdown of all the different programs that really are in the conventional world, right? Just within Fannie, right? You have Home Ready and Home Possible under Freddie. You have, different LLP or MI programs and down payment assistance programs, so on and so forth. So definitely, you have that, and you also have Giving Tree's internal scenario requests, right? Where Chi and the team will then submit your scenarios to the different lenders. And I hope you guys all bookmark that page. The loan scenario, it's a Google sheet, right? Super helpful. I just used it yesterday on a file. Specifically, this is going to transition what I'm going to share today. The different type of second liens that we have. Okay. So today I wanted to share with you guys an actual a live file that closed, why I went with it. And it might be redundant, but I want this as a refresher because I just retook a seminar class through NewFi. John Wise, the VP there, actually wanted me to be on. I didn't know this, but my file with them was one of the very first files to have closed with NewFi under the bank statement second program a few months ago. So, which is really cool, right? So my name's a little popular there at NewFi. So I'm going to share you my screen. And I'm going to go over why I used what I did. Okay. All right. So again, I apologize for those who have already seen this before. It's a quick refresher. Okay. So obviously we have a lot of the news, the hot topic news in mortgage and real estate all throughout the country is what? Right? It's yes, rates are not necessarily coming down. It's volatile. Prices keep going up. But what's the bigger news? The more positive news that news media is spinning right now. Real estate agents are spinning. You as lenders here, we as lenders are spinning. What's the hot topic? Anyone want to throw it out there? What is the hot headline that everyone is sharing right now in the world of real estate? Yeah, Harrison?
House prices are coming down?
Not necessarily. A more positive one. Anyone? What is the one thing people are sharing right now in the real estate, all inclusive in real estate? Nothing? There's a ton of equity, right? There's something like $11.6 trillion of equity, and there's about on average 200 to 250 to 350, depending what state you are in, of equity that you can tap into, right? That's a headline everywhere. Quite frankly, why? Because there's a lot of other bad news, right? Home prices are, and to Harrison's point, some areas are seeing some depreciation, but here in Southern California, in our local market, we still are not seeing depreciation, not quite yet on a macro level, right? We're still seeing growth. And so that's not necessarily a good thing, right? Well, depending on how you look at it, but for those buyers, they want to see the prices come down, of course, but with interest rates constantly hovering in the mid 6s to 7s, really, if you're selling retail rates, it's just not attractive news. But the attractive news out there is what? There's a ton of equity. What's now on the flip side of things, what's kind of a disturbing news? What's a disturbing headline in America? We have a lot of debt, right? So how many of you guys have taken a lead or talked to someone at a ball game or a mixer and like, oh man, I want to purchase a home, but my DTI is not sufficient enough, right? I have too much debt, credit card debt. Right now, rates on average right now in America are 22%, 23%. And I could tell you myself personally, every new lead that I get, people are drowning in debt, right? So you've heard this. Now, with this tax return here, just a quick, just a quick story here, some context. They are a dentist. They're reporting about $2 million in gross receipts, top line. Bottom line's negative $126,000, right? But you and I should know by now as loan officers, when you see that negative number, you don't necessarily need to freak out. Why? Because right away you want to look at depreciation. And in this case, they have enough depreciation that can basically negate the loss. So depreciation is something that we always add back, right? So at this point, it's zero now. This business has generated zero profit for the most part, right? It might actually be negative if we actually go further and deeper into a dive and factor in meals. Right here, we have to double count, but this does have amortization. This is just a quick recap of how you cash flow, right? So we're probably like positive, let's say $30,000. And then when you go up to here, you see that they have a compensation of officers of $273,000. So for all intents and purposes, we're going to qualify about $273,000 of income. Really good money, right? Really, really good money. However, okay, and I do apologize, I didn't have this one ready. If I pull up their credit report, oh, my mouse is really slow. In case, if I pull up their credit report, they are drowning in debt. It is ungodly, I will say, how much debt they have. If I have one, I'll bring it up real quick. Otherwise, I'll move on. Let's see here. Bear with me, guys. Oh, here it is. No, that's the daughter. Okay. For sake of time, I had it ready earlier, but I don't have it right now. So they have a ton of debt, and basically what they wanted to try and accomplish was they wanted to take out a line of credit, okay? But for conventional purposes, because of the amount of debt they had, they could not qualify. They also own a $2 million home, $1.5 million, or $2 million home with a $1.5 million mortgage on their first at 3%. They didn't want to touch it. Obviously, their payment's like $13,000 though, right? So the quick math, right? Even though we're qualifying to $273,000, right? If their mortgage is $13,000, right? $13,000 divided by 22750. They're already at a 50% DTI. Does that make sense? Do you guys all follow that real quick or no? Yeah, let me show you that. Share. So what I did, guys, was this, right? It was 273 to officer compensation divided by 12, $22,000, right? Their monthly mortgage on their first is $13,000 divided by 22,750. They're already over 50,000 or 50% on their housing ratio. There's no way this couple or this doctor was going to qualify for a conventional mortgage. You guys follow? Right? Okay. So when NewFi came out with their second, a bank statement second, that was the solution. Okay, so real quickly, I'm going to show you their bank statements. Okay, now they have sources, their bank statement sources. They have several. So with NewFi, you can there can be multiple business accounts. Okay, so I'm just going to select any 1 month, right? And you'll see here their total deposits about 30,000 here. You guys see that? Okay. Another one, about 28, another month, 27, another month, right? So you guys get the drift, 27, right? So this is just one of the accounts, right? This is just one of the accounts. And then I go to, that was Wells Fargo. And then we have Chase. If I'm going too fast, please let me know. Stop me. So here, deposit 77,000. Okay. 46,000. 42,000. 24. That's a little bit low. 45. Right. So you got to get the drift. If you here's going back even further, 85, 75, 65. Right. You guys get it? So when we're looking at the bank statements, we have one bank account that averages, let's say, 60. Okay. You saw that the other one was around like 30, right? So over the course of 1 year, you average the two out. We're getting about 60 plus 30, which is $90,000. It's actually more, it was closer to 120 with the other bank statements, but just within those two bank statements, there was $90,000 of total deposits. Okay. I wanted to go with the path of least resistance. I didn't want to get a CPA letter saying this is the expense ratio and this and that. So we just took a default 50% expense ratio. Okay. So $90,000 of average monthly deposits, take out 50% of expenses. What are you left with? What's the quick math?
45.
Anyone? 45. Thank you, Steve. $45,000 now becomes what? The qualified income for this. Okay. That's heck a lot. That's double, right? That's double the $22,000 based on their tax returns. And because we had enough income, we were able to, through the bank statement program, we were able to get this doctor who's a homeowner a second loan. Okay. And I'll even share with you the loan docs to see what the rate is and the payment. And the doctor was happy. He took out, I think, close to $300,000. And yeah, we closed. Here it is. So this is a CD. Here it is. Sure. So here's a CD. 9.5%. Do you honestly think this doctor is going to complain about a 9.5% when HELOC, your conventional HELOC rates, are more or less about 8%, right? 8 to 8.5%. What else? Your credit card debt, right? Credit cards are 22. I mean, this guy had over $100,000 in credit card debt. So 9% is nothing. Less than $3,000 payment. I charged, what I charged there to show it. But I think it's at 2%, a little over 2%. Okay. And this is for a HELOC, right? And there's no escrows or impounds, obviously, because this is a second. This is a great product right now to be out there in the market sharing. NewFi has come out with their own marketing. Obviously, I'm not sure if this is going to be Harrison's space, but this is their marketing piece, bank statement second program. I don't particularly like it, I'm going to be honest, but they have it. You can use it. You could probably put it up on ChatGPT to spruce it up a little bit. Yeah, it's a white label. It's a white label, right? But this is something really, if you're not already, and I plan to do it soon, hopefully even today. But if you don't have a video to post on Instagram or at Facebook or YouTube, just, hey, here's one. Hey, are you self-employed? Do you own a home? Do you need additional capital to expand your business, pay off some debt, buy out a partner, purchase another business? Well, we have an option for you. Something like that, right? I just made that up in like 5 seconds right now. But it is a great program. I know NewFi right now, they just had their training last week. They are going full blitz, is what John Weiss said, the VP. They're going full blitz right now on this program. They see the success. They see it even further more with the rates the way they are. So they're making a push. And I thought it would be a really good chance and time to share with you guys the power of that product. If you guys don't have access, please do get access, but I will take you through real quickly my last share screen. Their their website real quick. It's if you go under what NewFi, it is their fixed second. You're gonna go to their Glacier second mortgage. Wait, sorry, let me see. Is that right? I believe it is. Yeah, Glacier closed second. Okay. They do offer different terms, 10, 15, 20, 30. Minimum loan amount 150. The big thing is you can pay off debt. So let me see here. I read that not too long ago. Yeah, paying off debt. Revolving accounts may be excluded if paid to zero. It doesn't have to be closed. That's a big one too. Sometimes there are lenders that require to exclude the debt on a second. You have to close that account. That's actually very true for a lot of traditional, conventional seconds. Okay, but in this case, they don't require it. Paying down, obviously you can exclude it. Has less than 10 months. 10 months payment on it on an installment loan, but do note that it does cap at 40% DTI. But again, hopefully with the bank statement program, you're gonna get a lot more income that would help out. But yeah, so this is the program. You can go up to 80% if you do 350. Okay, if you want up to 500, it is cap out at 70%. But again, right now, the big news headline topic is what American homeowners have a ton of equity. Okay, so I expect you guys to go out there and just connect with one business owner right now, right? Just talk to one business owner who owns a home, who is looking to expand, needs reserves, otherwise, and introduce this program. Any question, guys? Any questions? Cool. All right. Well, I'm going to stop here before we go into deal talk, because I did promise Freddie I'm going to share him one of my files that I did in the past regarding a tax return. Peter, is there anything you wanted to share?